The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair MacLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair MacLeod on behalf of Gold Money, and with me I'm delighted to say I've got Niall Ferguson, who is a well-known historian who has written many books. He's a prolific writer. He recently did the Reith Lectures for the BBC, which I think was last year, was it, Niall?
That was actually earlier this year, in the summer of 2012.
Time is not flying fast enough for me then.
Clearly. It just seems like a long time ago.
Niall, I really am delighted that you're here because my particular interest is very much the global scene and what's going on with the big power politics. It's rather refreshing to find someone who I can talk to about this, because otherwise the subject is purely about the ghastly problems facing Europe or the fiscal cliff or whatever. So can we put that to one side? I would be very interested in your take on the change of power, or there's not quite a change of power, but the evolution of power in China. How do you see that?
China is going through a very difficult phase in that its political institutions are now really quite out of kilter with its economic development. This is a country that has grown around about 10% per annum since 1978-79, when Deng Xiaoping introduced his reforms, and it has created in the process the biggest middle class on the planet. And yet it is still a one-party state, governed in a very opaque way by a 9-member standing committee of the party Politburo. At the moment, as we speak, a transition is happening that will reconfigure that standing committee, possibly shrink it in size. And we don't know, because the whole process is so opaque, whether or not this will usher in a new era in Chinese politics. There's no doubt in my mind what has to happen in China over the next 5 or 10 years. There needs to be large-scale privatization of state-owned enterprises. There needs to be a fundamental reshaping of the rule of law so that the party is subordinate to the law rather than above it. And there needs to be a regionalization, if not an internationalization, of the renminbi, the Chinese currency. We're talking now about the second largest economy in the world. On a purchasing power parity adjusted basis, it will overtake the United States within the next 5 years. And there's just no way in my mind that such a large country with such a dynamic economy can continue to be run with institutions that are essentially the legacy of Mao Zedong.
My sort of take on this is that once Mao Zedong sort of left and there was a sort of transition period, China had something like, is it 40 or 50 diverse ethnic groups who left on their own would probably beat the hell out of each other. And so they needed to come up with a new strategy, as it were. And obviously, they were becoming bankrupt under the old strategy. They therefore invented their sort of capitalism, which really, in a way, was copying the West. And they copied the West from the monetary sense, insofar as they depressed the currency so that they could build an export market. That phase is probably mostly done. Under the new leadership, presumably, they will develop more the domestic market, the domestic economy, and instead of looking across the Pacific towards America, presumably they will look more into Asia. Do you think that's a reasonable, a very potted description, perhaps, of a layman's view of what's going on? What do you think of that?
I guess everybody has their own potted version of modern Chinese history. Mine would be a little different. The creation of a more or less homogeneous Han Chinese population was indeed one of Mao's achievements, if achievement is the word, though the process had indeed been underway before 1949. their economic achievement is almost nothing to do with Mao. Mao inflicted two huge catastrophes on China, the Great Leap Forward and the Cultural Revolution. The economic successes are largely down to Deng Xiaoping and his successors. And it's true that a driving force in China's economic growth was the export sector. But one mustn't forget also the importance of foreign direct investment in building that sector. Creating these special economic zones and bringing in American and other money was as important as having the weakened currency and the export drive. You also have to remember that just as fundamental a change was the creation of town and village enterprises, the sanctioning of private property rights in the countryside, the sanctioning of what had been illegal capitalist activity. That really, I think, deserves even more of the credit, because the big driver of China's extraordinary economic growth has been the way in which a private sector has flourished around a still important government sector, public sector, which has been responsible for the infrastructure investment and much else. The decision to shift away from export markets to the domestic consumer was taken some time ago. It's the current 5-year plan has that as a goal. So that's already done. And with some success, because although China experienced something of an export slowdown when the world of the West went into financial shock, retail sales have grown very strongly in China. China became the biggest automobile market in the world in, I think, 2010. So a lot of this is already underway. One eminent Chinese economist said to me recently that China is essentially where South Korea was in the early 1970s. It is following a not unfamiliar East Asian path to growth, in which government has played a part, in which exports have played a part, but in which, above all else, an unleashed Asian work ethic has played a part. And now the challenge is, I think, almost more a political challenge than an economic one. It is more about, do you create a true rule of law so that your new middle class can feel secure in their private property rights? That's the biggest question that China faces today.
Now that's interesting. So they have already started with the current, or just this last 5-year plan, to refocus their economy on the domestic market. They're building a consumer base inside China. Now this must mean that they are evolving their views on the currency front. They're no longer presumably as interested in keeping the currency down, though obviously they won't let it sort of jump up, because that will crucify quite a lot of their business, or at least that is conventional Keynesian thinking, which presumably informs them to a degree. But on the currency front, with things changing, I mean, one of the things that just interests me is the way in which China herself has been accumulating gold. And also, I think from about 2004, she let her citizens, and indeed encouraged her citizens, to buy gold. So I see a sort of a shift which has the makings in some undefinable way of China becoming independent of the dollar, which must be the next objective. Do you get that sense?
They've been worried for some time about the extent of their exposure to the US dollar. It was a regular topic of conversation during my visits to China in 2009, 2011. This is obviously the big worry. If you look in Chinese bookshops, the best-selling economics book is Currency Wars. And the central thesis of Currency Wars is that the West has this way of sticking it to its creditors. So the Chinese are very focused on the idea that at some point their dollar claims will be worth much less. And certainly if you just look at commodity prices, that's already true, because the dollar buys a lot less oil and a lot less gold and a lot less, you name it, than it did 10 years ago. So the Chinese response to this problem has been, one, to complain about it, and two, to carry on piling up the dollars, because what else can you do if you have a current account surplus as large as they do? If you are systematically intervening to keep your currency from appreciating, you're going to end up with a great pile of dollars. And China's international reserves reached giddy heights in the last few years.
It's inevitable, isn't it? But to some extent, what they're trying to do, it seems to me, is they're trying to get out of dollars and into commodities.
That's certainly true, but there aren't really enough commodities for sale in the sense of commodity assets. There aren't enough copper mines. You can't take $2-3 trillion of international reserves and just buy claims on commodity producing assets. It's difficult, even in the most willing African economy. The Chinese have trouble. Think of Zambia, where their presence became a hot button issue at the most recent election. So while they are clearly pursuing that strategy and seeking to acquire hard assets around the world, there's a limit to how much they can do. And that's why, even as they complain about it, they've carried on acquiring dollar-denominated assets. Their share of the US Treasury market's gone down a bit, and the Fed has become a more important buyer than the People's Bank of China, than the SAFE, the foreign currency agency. But they still have huge exposure. The gold story is interesting because that was clearly part of the attempt to hedge the risk. Just as the indirect support for the euro that went on during the worst of the euro crisis was designed to make sure that at least there was one other big liquid currency out there. The Chinese do not want the euro to disintegrate. But they don't really have a complete and perfect solution to the problem of dollar dependency because their exposure is so great, and you can't liquidate a position like that fast without actually hurting yourself.
But there are two elements to this, aren't there? There is the trade situation with China and the rest of the world, and there is the trade situation between China and the rest of Asia. And one thing that interests me is China's relationship with Russia through the Shanghai Cooperation Organisation. And as far as I can see, Russia and China lead it up. The various stans in the middle are all full members. There are a number of other members queuing up to get in, and these include Russia, Iran, Pakistan. I mean, some of these are at war with each other, which is fascinating. Afghanistan, as soon as we've all left. And so on and so forth. And this is going to end up a trading bloc which will have over 3 billion people in it. It really is the most extraordinary thing. And I think the difference between this and the European Union is the European Union is very keen to tell other people how to behave. When the Chinamen and the Russians turn up, they just want to trade. And it's a completely different attitude. And as I understand it, they're focusing on security, which was the initial issue. They're also focusing on cross-border infrastructure projects, for example, rail, hydroelectricity, and so on and so forth. And one of the last things, apart from trade, is trade finance and settlement of trade, which they want to get away from the dollar, because every time something is done in dollars, it's reflected in a bank account in New York. And that is something that I think neither the Chinese nor the Russians like. If I'm right in this, how are they actually going to get away from using the dollar? How far down the line are they in terms of setting up an alternative? And should this worry us?
The Shanghai Cooperation Organisation is one of a number of, I suppose, newish institutions that could be seen as an alternative international order. There are two questions. One, can Russia and China cooperate meaningfully, given their historic rivalry, which has on occasion spilt over into open conflict? And also given the way in which the Chinese eye Russia's resource-rich population scarce east. The second question is how far this organization is just an instrument in President Putin's long-cherished plan to reconfigure the old Soviet empire. And if it is that, it's hard to believe that anybody else shares his enthusiasm for the project. I think it's possible that this particular enterprise has passed its peak in importance. And the reason I think that is that the scene, the action, at least from a Chinese vantage point, has in recent times shifted eastwards. And much of China's attention right now is focused on the Pacific region, and particularly on its relations with Japan, but also Vietnam, the Philippines. And I think that shift of attention isn't likely to change now that the United States has explicitly said it's going to contest primacy in the Asia-Pacific region with the famous pivot. This is a time of tremendous flux in the international order. The order of things established in the Middle East in the 1970s has crumbled in the Arab Spring. The economics of energy are radically changing as the shale revolution transforms the United States into Saudi America, as it was dubbed by, I think, the Wall Street Journal the other day. And this change has implications for Russia's geopolitical plans, because the natural gas being produced in the United States was not something that the directors of Gazprom saw coming. And Gazprom's a pretty big part of the Soviet, or rather the Russian enterprise, the Russian project. So my sense is that when you looked at this organization a few years ago, it looked a lot more worrying than it does now. And if I had to take a hesitant guess, it would be that it's really an institution that will not be decisive in the international politics of the next decade. And if I'm wrong, then you can say, "Look, I told you so."
Well, I think I'll rely on you as the expert on that one. You mentioned the Arab Spring, and not quite the Arab Spring, but Iran is one of the putative members of the SCO, and I think supplies both India and China with large amounts of oil. So therefore, as far as China is concerned, Iran is extremely important strategically. Does it worry you that we seem to be doing everything we can to destabilize Iran, even the Syrian situation, which may be tied to that? Is it going to come a point where suddenly China, we find, is confronting America on Iran? Is that going to blow up, do you think, in that way?
Well, I think it's extremely good that we're seeking to destabilize Iran. I think nothing would be more welcome than regime change in Tehran. I wish it had happened in 2009. I think there was a moment when it nearly did, but a complete lack of enterprise on the part of the United States government meant that moment passed. The sanctions regime is really beginning to have an effect on Iran, but I don't believe that sanctions alone are going to achieve a decisive change in Iranian policy, especially on the question of nuclear arms. It's getting harder and harder for people to get around those sanctions, including the Indians. And I think the other critical point here is that the Chinese do not want to be in a confrontation with the United States on this issue. Indeed, the Chinese don't really want to be playing any key part in this problematic part of the world. They, as you put it yourself a moment ago, they just want to trade and let others take care of the geopolitical headaches. I think this makes no sense over the long term because they're so much more reliant on Middle Eastern oil than we are. And so it's not entirely clear why the United States should be policing a region in the interests of China's oil importers. At some point, China is going to have to step up and play a more responsible role in maintaining stability in that most volatile region. And so the last thing I would expect is a confrontation over Iran. I mean, they're very anxious, I think, to avoid that. Not that they've been helpful, but like the Russians, I think they understand that ultimately you can't just sit on the Security Council of the United Nations blocking efforts to prevent nuclear proliferation by a very dangerous regime. So I see their positions changing on this issue, and I see the Iranian regime coming under more and more pressure, and it may ultimately be military pressure that's needed. Iran is running out of friends very fast.
Indeed, yeah. But it is a worry. And like so many of these things, we don't know how it's going to turn out. One of the things, changing the subject totally, one of the things that I feel very strongly is there has been a huge shift in the outstanding stock of gold from the west to the east. The Indians have been acquiring it for decades and decades. I mean, initially through black markets and so on and so forth, and now more openly, now that they can do it. The Chinese have embarked on this, the Chinese population, having been permitted to buy gold, I think, from 2004, 8 years ago, and now have overtaken India. The Gulf states also, in the past, if you go back 30 years, were great acquirers of gold as well. I feel there's very little left, really, to share around in the West. Do you think this has any geopolitical implications, this shift, if you like, of ownership of gold?
Well, I think it's a symptom of a very much more profound shift from the West to the rest that has been going on since the 70s. The big story of our time is the end of Western predominance. And that's there wherever you look. It's there in the data on gross domestic product. It's there in the data on industrial production. It's there in even the data on technological innovation and educational standards. The world is shifting. The center of gravity is no longer firmly in the Atlantic. The world's center of gravity is now shifting eastwards through Central Asia. And that's a huge change after 500 or so years when the dominant trend in world history was for the West to become predominant. We are going to see more of this. And the ownership of gold is only part of a much bigger story, of a shift of massive historical proportions. And it's a shift that's happening very fast. If you think of the fact that in 1978, the average American was at least 22 times richer than the average Chinese, whereas today he's just 5 times richer than the average Chinese.
Really?
This is amazingly fast historical convergence that we're seeing. The Chinese middle class is the world's largest. This class scarcely existed 30 years ago. It is fast becoming the swing consumer, particularly for luxury goods. China now has, after the United States, the biggest number of billionaires in the world. But China is also overwhelmingly the dominant consumer of base metals. China is the number one purchaser of all the base metals.
They're also huge savers too, aren't they? I mean, the savings ratio is something staggering, like 40%. I mean, if you can believe the statistics.
I think those statistics are right. If you're looking at aggregate savings, what you're really seeing here is massive retention of earnings by state-owned enterprises. It's true that households have a high savings rate, but that's not really the surprising thing. The surprising thing is that the massive savings that go on in the corporate sector. And that's actually crazy, because it would be far more sensible for these corporations to be distributing their enormous profits through dividends to shareholders. But they don't, because they're state-owned enterprises, which is one of the arguments for privatisation.
Indeed.
So this is the new world of the 21st century, and we're going to see, I think, a continuation of many of these trends. Things will slow down. China can't grow so fast now. It will, as I said, become more politically challenging to run China, because middle classes have this way of expecting not only their property rights to be protected, but also to have other rights, particularly the right to express themselves freely, and even to have some say in their governance. But ultimately, the economic trajectory, I think, can be continued for at least another 20 years before the demographic forces really slow China down. the legacy of the one-child policy is going to be very expensive ultimately for China. But I don't think anybody should put money on a China crash. I mean, those people who argue that China is a bubble, it's about to bust, there are cities, without people, I think they've just not spent enough time traveling in the country and don't understand the history of Asian industrialization. We have seen versions of this movie before, and the movie has its financial alarms and excursions. China is bound to have some bumps in the road, just as Japan did, just as South Korea did, just as Taiwan did. But I think to expect it suddenly to come to a halt, I think that would be a big mistake. So expect more gold to end up in Chinese hands and more of, just about every form of wealth you can imagine.
Yes, that's interesting. I agree with you about the outlook for China. I mean, you're right, there will be bumps. And they've expanded credit and all the rest of it, so you get credit-driven cycles. I mean, we know all that. But actually, when push comes to shove, it's not a mature economy in the sense that the Western economies are. It's not mature in terms of personal debt. They're strong savers, and they will get through these bumps a lot more effectively than I think we could in that position. Japan probably has a greater risk, I think, insofar as you've got the demographic time bomb. You've got a currency which is levitating. I mean, it's the only way to describe it. And sooner or later it's going to stop levitating, I guess. And also, by comparison with China, I mean, you look at the European situation. I mean, is there any redemption in Europe, do you think, in the Eurozone?
Well, Japan and to some degree Europe are showing us what happens at a certain level of development. If you have an aging population, people live into their 80s, but they have very small families. If you have a relatively generous welfare state, at some point, the only way to sustain the welfare state is with borrowing, and at some point the debt reaches an unsustainable level. This is surely very near in Japan, and it's approaching in Europe. In the Japan case, it's difficult to know at what point something's going to give. But simple arithmetic tells you that you can't get public debt much higher than 250% of gross domestic product without there being a problem, and especially since your supply of domestic savings is ultimately going to diminish. So at some point, Japan will undoubtedly experience a major shift in the expectations of the Japanese and foreign investors. Don't ask me when, because many, many men have lost many, many millions of dollars trying to bet on that date, and I'm not going to join them. Europe I know more about, and so perhaps I can speak with more confidence. The idea of creating a monetary union without any kind of fiscal integration was a completely stupid idea, and some of us said that at the time. Throughout the debates on monetary union in the 80s and the 1990s, I consistently said that there was no historical precedent for something like this working, and at least by good luck, more than by design, Britain stayed out. But now we see the consequences. There's a complete mismatch between the needs of the periphery and the core, and it's going to be extremely hard to transform this monetary union into something more like a fiscal federation in the midst of all the domestic political strains and stresses that the crisis has unleashed. I think they'll probably keep it together, because I can't imagine Angela Merkel wanting to be the chancellor who killed the euro. But it's not going to be easy. And one thing I think is pretty clear, there's not going to be a rapid recovery in economic growth under these circumstances. In fact, you're going to get Japanese-style lost decade, and without Japanese social harmony.
Absolutely. Funnily enough, I was looking at the industrial production figures for Greece, Spain, Italy, and France. France, I think, is a huge worry, and they're all nosediving. This is not good.
Although there's some sign of recovery on the periphery, I agree with you about France. France is still regarded as core and bracketed with Germany and the Netherlands in terms of its sovereign risk. I think that's very odd, because French problems look much more Spanish or Italian than they look German. So I think we thing we could expect is that Monsieur Hollande's government will be so incompetent that investors will suddenly wake up and say, actually, France belongs in the periphery with the so-called pigs. The question of whether you can get a recovery in the midst of fiscal austerity is a really interesting one. There are some signs of life. In Ireland, there are very, very early signs of life in Portugal, Spain, Italy, Greece, if you look closely at the data. But the political situation is not good. And with youth unemployment at 50% in Spain and Greece, who would expect anything else? I don't know if Europe can get to September 2013, which is the month of the next German federal elections, without another major bout of crisis. I rather doubt it, because whether you look at Greece or Spain, an awful lot can go wrong between now and then. So I suspect the euro survives. I suspect it survives with a pretty mediocre, if not miserable, growth path. And I suspect it survives despite a lot of domestic political instability on the periphery.
Yes, as you say, no one wants to pull the trigger on it. Niall, that's absolutely fascinating, and thank you very much indeed for taking time to speak to me. You're speaking this evening, I know, at a gala dinner for Austrian economists. Can we have a quick preview of what you might be saying as a last question?
Well,
or do you just stand up and sort of say what comes to mind?
I'm being given a prize named after the great Austrian economists, or I should say Austro-British economist Friedrich Hayek. And so I'll probably say a few words about my intellectual debt to him as one of the great opponents of socialism and the welfare state and Keynesianism of the 20th century. I also want to say a little bit about the next generation, since some of the people in the audience will be young prize recipients. The fundamental problem of developed economies today is intergenerational inequity. Enormous debts have been racked up by the baby boomers, and those who will pay are not voting, and some of them haven't even been born yet.
No,
and that's the central theme I'll be discussing tonight.
Well, that's fantastic. And again, thank you very much indeed on behalf of all our listeners at Gold Money.
My pleasure.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.